morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, November 12th. Hope you guys had a wonderful, Veterans Day, and thanks to our veterans. We certainly appreciate your hard work and your services and your commitment to protecting us and our country. As Unlike earlier this week, we actually got some data to report today. We will start off with the Consumer Price Index, which is inflationary data on the consumer level, which is an important index. More important one would be the PCE, or Personal Consumption Expenditure, because that's the gauge that the Fed actually uses. But we do heavily weigh the CPI as well. So the headline number here for month over month is 0.2% back in September. Forecast comes for a 0.1 increase for the month of October. However, it basically came in at zero. So its annual year over year, it dropped from 1.4% back in year over year back in September. Forecast comes for a 1.3 drop, and it dropped all the way down to 1.2%. Now, when you get what they call the food and energy, exclude that because those are variables that we cannot control. We get the basis. So they call that the core CPI, and this is really what the economists and everybody else will look at because you can't control obviously the food and energy here. So month over month, we'll start the month over month. Sorry, it was 0.2% increase in the month of September. Forecast is supposed to continue that same trend at 0.2%, and like its counterpart, basically it was at flat back in October. So its year over year or went from 1.7% to a forecast of going up 1.1 to 1.8. However, it dropped 0.1% down to 1.6%. Now, last but not least, we got the jobless claims. This is a report that we get every Thursday, and we had a 751,000 people apply unemployment in last week's report. However, that did get revised. It's not showing on here, but it was revised a little bit higher to 757. Forecast is calling for a drop down to 735, and it dropped even further down to 709,000 people applying for unemployment rate. Now, this is a good number. We're seeing this decline, which is obviously good news because fewer people applying for unemployment. And another good news is they showed right here the continued jobless claims. We don't usually report on this, but we finally dropped below the 7 million mark, the continued jobless claims. So now we see fewer than 7 million people continuing with their jobless claims. So people are getting back to work, which is obviously very good news in this report here. Let's jump ahead here to the headline news. Stocks are mixed. When I checked the report earlier, both the Dow and the S&P were down. However, NASDAQ was up this time around. So we had kind of a flip-flop of the Tuesday report where NASDAQ was the lone index in negative territory where the other two were positive. So we have the flip-flop going on this morning. It's taken its cue from the coronavirus, so we're still seeing spikes in there. People kind of panicking in terms to higher testing. What the media does, of course, come out with is that as a country we have millions, over 100 million people being tested, and of course you're going to have higher numbers coming out, whereas a lot of countries don't have as many report or people testing on these. And the more important thing is we need to look at the hospitalization rates. Are people going to hospitals? So that seems to be a little bit more in control right now. So that still hasn't come in there, but of course the media wants to play out the spikes in the coronavirus tests here. So anyways, take it for whatever you want to believe in. For me, I don't necessarily. I think we're overreacting on this, and the media kind of is portraying that to be more than what it really is. In any case, let's kind of move on. Go over towards the mortgage-backed securities. Take a look here to see how mortgage rates are doing. We're getting a bit of improvement. As we saw, we pulled back quite a bit on Tuesday and fell right back below this 100-day moving average. However, today we started much higher, and right now we're up 20 basis points. We're approaching the 25 and 50-day moving average. As you see here, we see the 50-day and 25 crossing here as well. So now the 25 is below the 50-day moving average. These are moving averages trend lines here, and we're just below that. So we'll see better pricing than what we saw on Tuesday, which is good news. For those who are looking to refinance or purchase here. Let's jump ahead here to the yields, see what yields are doing. Sorry about that, went the wrong direction. Yields are down too. So this has been pretty strong so far resistance, this new technical level. We're down to just under 9.2 right now, and still got some room. We're kind of in the middle range between the two technical levels right now. So that's pretty much the wrap for the day. So rates are a little bit better than what we saw on Tuesday. Good news again. If you guys are looking to refinance or purchase, feel free to hold on. I will put at the end of this video a link for you to, and also in the description, a link where you can go to get some information on mortgage products. You can learn a little bit more about the products. You can learn a little bit more about the process and everything on there. If, for example, you don't have any, you have questions, it doesn't, the site does not answer those. I am a loan officer, and the company I work with is a national lender. My contact information will be on there, so please feel free to reach out to me anytime. I'd love to be able to help you guys out. We can certainly help you out with any refinancing as well as purchasing. So we can help you out with your pre-approval and get you guys pre-approved so you can buy your next property and provide the financing for that as well. All right. If you guys, again, got any questions, please feel free to reach out anytime. You guys have a great rest of your day. Thanks so much for watching, and we'll see you in tomorrow's video. Bye-bye.